Hello, welcome to Russell Investments Market Week in Review for the week ending August 2nd, 2024. I'm Zoe Wargans, and I'll be hosting you today. And joining me in the Seattle office today is our investment strategist, Bei-Chen Lin. So good to see you in person, Bei-Chen.
Same here, Zoe. Pleasure to be here today.
Yes. All right. So we have a lot to cover today. Let's get started with the latest central bank's moves. We just saw an updated policy statement from the Fed. So tell us a little bit about the details there.
Yeah, sure. So the Fed announcement today was pretty much in line with what investors were expecting. They decided to leave interest rates unchanged at today's meeting, but they did signal that they felt there was more progress that was made in terms of the inflation fight. If you think about it, core inflation rates today at around 2.6% year over year, they're much lower than the 5 to 6% numbers that we had seen previously. And so because the Fed has made so much progress on bringing down the rate of inflation, that sets them up in a nice position to be able to potentially lower interest rates as early as the September meeting. Chair Powell also noted that because the Fed has made so much progress on fighting inflation, they can now be a little bit more balanced in their risk management. So the Fed has two key goals. One is price stability, but the other is what they call maximum employment. And it's this idea that they want to ensure that labor market conditions are still strong. So even though for now, when you look at most measures of the labor market, job creation thus far has remained pretty resilient, what the Fed wants to do is they want to make sure that those conditions can hopefully be sustained. And so the idea is if inflation is coming back down, the Fed can lower interest rates gradually over time towards a more neutral setting so that they can maintain these two policy objectives. Mm-hmm. Now, from our perspective at Russell Investments, we continue to expect that the Federal Reserve will likely be able to make their first cut in September, and it'll likely be a 25 basis point cut. But of course, Chair Powell himself noted that they're going to remain data dependent. Not necessarily one piece of data, but they're going to look at all the data available to them in making that decision.
That is always good to hear. Good to have some evidence backing up what they're doing. What about around the rest of the world? Any other central bank news to cover?
So this week is what I would call a central bank data buffet. So in addition to the Federal Reserve, we also had a decision from the Bank of Japan as well. And the Bank of Japan decided to raise their benchmark interest rate to around 1/4 of a percentage point. So previously, it was in the ballpark of 0 to 0.1%. Now, it's important for investors to be mindful of the fact that Japan, unlike a lot of other developed market economies, has been suffering from a bit of a different challenge. Whereas a lot of countries like the US, UK, Canada, etc., they've been trying to lower inflation. Japan was actually struggling for many years to get inflation back up to their 2% target. But now they're seeing signs that inflation expectations are becoming more entrenched, that wage growth is rising. And so what that means is that the Bank of Japan can start normalizing interest rates over time. Earlier this year, they lifted interest rates out of negative territory for the first time in more than a decade. And today, when we are filming this as of July 31st, 2024, they decided to take it one step further and raise interest rates slightly to roughly 1/4 of a percentage point. Now, going forward, we expect that the Bank of Japan will be relatively measured in their rate hikes. We do expect a little bit more policy normalization, so more rate hikes to come, but we think that it's going to be a relatively slow pace. It's not necessarily going to be, every single meeting is a hike. We think it's going to be measured because, once again, Japan has had a decades-long experience where inflation never got up to target. So they're going to be very careful, very measured to make sure that they can sustain inflation right where their target is.
That makes sense.
And then there's one other central bank that's going to be releasing their decision this week, which is the Bank of England. They're going to be out with a policy decision on August 1st, so that's a little bit after we filmed this. But that's another important central bank to watch as well, because market commentators are expecting that potentially the Bank of England could lower interest rates by 25 basis points this week.
All right, interesting. I feel like we've spent a lot of time covering inflation, so it's good to hear that there's some actual movement going around. All right, interesting. One for the little guys. Great. Well, Bei-Chen, thank you so much for helping us unpack what has already been a very eventful week. And thanks to all of you for joining us. I hope you will join us again next week for Market Week in Review.
Hi, I'm Sophie Antel-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.